Hello, this is Dave, and welcome to Equities Story. I'm with the Wolf, and this is just a general share advice and not personal. All right, Wolfie, there wasn't too much out today, but a lesson in corporate management with CSL, far away.
This is how you do it. I suppose if you're going to be changing your CEO, have a replacement ready. I think that's the key here, because they've done absolutely the right thing here because of the market, how the market's reacting, and which is muted. And we've seen CEOs go and share price collapse by 20-30%. We've seen it with Elders, we've seen it with Coden, we've seen it with some other stuff as well. This is the playbook everyone needs to follow. You need to have a replacement story. So even if your CEO goes to the management, right, and goes to the chairman going, I need to probably, start looking for something else to do because I'm bored, then the chairman should say to the CEO, just keep it quiet. Let us get everything sorted out first. We won't tell anyone until we're ready with a replacement. And that's how it should be done, Dave. There you go.
Si, senor. Si, senor.
Because people and investment markets just hate uncertainty. So when you've got a CEO leaving that's done extremely well, Elders, right, over 10 years, taken the company from almost collapse to what it is today, and you've got no replacement named, people go, well, sell, pretty much.
Definitely, and I think my past life, I think promoting people from within the business that understand it, that know the sort of general going on, it sort of keeps the stability going, doesn't it?
Absolutely. It's the stability, the know-how of the, you don't even have to teach everyone. You're not going to take a whole new direction, right? So all the cultural things, if the company has obviously been run well, it's going to shine through. Just like remember with Macquarie, right? With, again, the CEO that's been here, it's always been done from inside. That's the way to do it.
Wolf, WA1 looks like it's coming back down to trend. And looking weak, and look, maybe a little bit of support at 145, but I'll tell you what.
If you're trading this, Dave, you got to probably get out.
Well, I would definitely. I think you can wait till the end of the day, but it's the danger with this sort of stock, Wolf. It could be back at $1 by the end of the day. That's
let me quickly just summarize that those results today. So we're expecting those essays from the top part of the drilling that were pretty good, right, previously, but I think their expectations much higher because they talked about it that whether it should be high grade. This is actually okay, but not the high grade everyone expecting over that top bid. So a little bit disappointing, I have to say, because I was expecting myself pretty higher. That's why I'm thinking maybe come back to the $1.
Yeah, no.
Again, go back to that actually picture. That was a good one. Let's keep going down. Right there. So you see that the top bit from Surface. That's what they essayed, and he didn't quite get through what the expectations were.
All right, so maybe a little bit of weakness and coming back down to that $1. So,
which would be probably healthy anyway. It's still interesting discovery. Don't get me wrong, but that expectations of the top bid is going to come out and going to be actually extraordinary. It wasn't extraordinary. So down she goes.
Right, thanks, that Wolf.
Mm-hmm.
DRE.
Yes.
So it's had a run.
Mm-hmm.
Follows normal exhaustion pattern. It's coming back down to trend.
Mm-hmm.
That little bit of news today. Do you think it'll help hold this Wolf above trend? And would you still be, if you're in this for the longer term, would you still be holding it?
Look, I'm still liking. Nothing's changed for me liking the story from the fact of interesting or pretty good REE discovery. You're gonna have those moments of shoot up to the top, right, with a few good drilling results, and then you're going to have a period where the FOMOs are going to get out and play something else, which is doing right now. But I think, generally speaking, the results are still good enough for me to keep hanging in there as long as the chart looks decent.
All right, let's talk about the stock that looks, I think, one of the more interesting today, which is Bendigo Bank, Wolf.
Mm-hmm.
So they're giving a 5.61% div, possibly grossed up just under around 7. Mm-hmm. Would that be correct? I've got them trading on P of 12. I think you said maybe 9 or 10 on your posh little Reuters system. Why do you laugh? I'm very jealous that why do you get the Reuters and all I get is the bloody?
Because really fundamentals are the key.
All right, I'll most probably.
You've got to pay. You've got to pay for the success.
Okay. So I'm having a look at this.
Yep.
I think this stock is going to go higher. Now, my question to you, you could trend it. You could trend it up to maybe $10.50. I get it, but would you be buying this as a dividend paying stock?
Yes. And look, this is interesting because you look at the big four banks and they're probably quality wise, they are better than Bendigo Bank, right? However, so you've got obviously a bit more risk with Bendigo, but you've got a pretty cheapy story at 11.5 times PE. And then you've got a very nice dividend grossed up, I think, at about 8%, Dave, like you said. But the interesting thing is there's actually much better growth in Bendigo than there is in all the four banks, right? And possibly you might see, if that obviously they can continue into this. I mean, God knows how banks are going to go in a recessionary market. But interestingly enough, the update today was pretty strong. That's why it's going up 7% odd. And possibly, I like the little smaller things. We're just looking at finding, remortgaging. Well, Natalie was looking for remortgage the stuff, and we're just looking at the different fixed rates. And some of the smaller stuff are much better than the big banks. So maybe there's a case that potentially a lot of mortgagees will go into the smaller type banks because they've got better rates. So yeah, I'm actually quite interested to see how it goes.
What are the new sort of mortgages nowadays?
To put through and lock it in like a fixed rate.
Yeah.
You're looking at close to about 5%, right? And at the moment,
and how many years? And how many years is that? About 3 years.
Yes, 3 years. Yep, 3 years. So look, it depends on what sort of view you take, right? If you think the short-term interest rates are going to go up, and at the moment, I think you're paying about about almost 4%. So you need about 4 months of increases of 0.25 here in Australia for you to start making actually some money.
No, I'm interested because you're looking at you obviously feel in the bottom of your heart that these interest rates are going higher.
Yeah, absolutely, and we've been saying that.
But you don't, right? Yeah, but you're not believing the rhetoric. You're hearing that maybe it will go up another 0.5 point, and then we'll start easing off.
No, I think my theory was that we probably need to get to roughly about over 4, so about 4 to 5%, somewhere there, for us to get a handle on this inflation. So I think we're going to probably keep going with that 0.25s for the next 3, 4, 5 months, right? That's my feeling. Now, there's talk from the economists out there that once we get to that point, we're going to start easing the rates. I don't think so. I think we're going to go through a period of higher rates for longer. Yeah. That's what I think is going to happen.
I agree. And that's the general feeling, isn't it? Sort of, and I think that's what they had to do in the 70s. They had to hold interest rates fairly high.
Correct. And that's exactly what I'm getting a feeling this time around. I think there's too many things happening around the globe for it not to be like that scenario.
Okay, thank you very much. So, Wolfie, then when you're looking for a dividend paying stock, as long as it's giving you over 5%, you're presuming bonds will go up to maybe 4.5%.
Yep, correct.
So any dividend stock over 5%.
Probably 5-6% now. Absolutely.
Yeah, makes sense.
Want more and more.
Okay, so that sort of really ticks the box again for if you take that medium to longer term approach for Bendigo, doesn't it?
Yeah. Although some people saying that are bonds safer than shares.
Well, it depends which country. It depends which country, right? So
exactly. So maybe 5.5 is enough from certain companies. Anyway, so that's Bendigo. I like it. I actually don't mind it at all as a dividend play. So maybe I'll look at it to put it on, because I don't think I've got any banks at all in a dividend portfolio. All
right, little CMB now. It's not trading, but not bad copper results.
Yeah, no, look, Dave, we talked about it over the last maybe month. We're looking for a copper play. We're looking for some explorers. We're looking for some developers. We're looking for some producers, right? There's not many producers at the top apart from SFR and of course Osminerals, which is undergoing a takeover from BHP. So we're sort of trying to find some of the smaller ones that are a bit more exciting, where we can see maybe a path to production. CNB has been coming out with some nice results. So, if it starts trending, probably one to follow, because the results actually have been pretty good. 20, 30, 40, 50, 60 meters over 1% is decent.
Yeah, it's great. But quite deep though, would you say?
Yeah, but this is just a number of results. So some of them are deeper, some of them are shallower. It's starting to add up. I think they need to obviously do a study, come up with some sort of a scoping study, let us know what they've got, maybe a resource as well, just to give us an indication where are we standing at.
All right, listen, some of the Einstein strengths, like we said, we thought yesterday could have been a bit of an opportunity. The market is strong, but we do have a risk event tonight on the Dow. We have these CPI numbers. I don't know. I think Wolf, I think there's a good chance they could spin it to the positive, because oil is down a little bit, isn't it? And stayed down a little bit, so that could help. But I suppose the core inflation numbers will be the Yeah,
and but the problem is the expectations are to be lower than previous number. So if it's not, God help us. If it is, then maybe we can have a little bit of a Santa rally, because I think the latest numbers before this CPI number spooked the market a little bit. That's why we had a bit of a sell-off last week, Dave, and obviously they didn't start great this week. So hopefully those numbers ease the general fear that the interest rates in America have to go by another 0.75. So the talk is here, if the numbers are decent, in other words, lower and within expectations, then the Fed will probably ease off from the 0.75 to 0.5 interest rate rises.
We will see. So interesting time. Now, Wolf, was there anything you wanted to add today? So we're going to add Bendigo as a dividend play. Good looking stock, like you said, one of the better banks, more growth than the others, a pretty respectful dividend. Did you have anything to add to today's story?
Yeah, let's go through a couple of things from F1 Arena. So CSL, because the stocks we really like to follow maybe or look at on a regular basis. So let's have a look at those. So start with CSL. We've got a price target and overweight from Morgan Stanley of 337, and they've upped that from 327. So that's looking positive. And I think with that CEO change and a decent, I suppose, reaction by the market, thank God, because I was really scared, because when I see CEO changes, I'm getting really nervous, right, these days. It's done okay. The next one is Fisher & Paykel, FPH. They've got a downgrade here just on the fact of valuation grounds. And they've got a price target of, let me see, 22.90, right? So that, I think that's in New Zealand dollars. So it's about $22, I believe, which is not too bad, which is roughly just slightly a bit above that. So I'm still holding the line. This is a really good turnaround story. I'd be looking to hold or buy, nibble, if possible, for the longer term, of course. So I'm liking that. And the next one I've got on here, let me have a quick look. There was one more, I think, and that was Sonic. Let's go to Sonic. And this one hasn't been performing well, because obviously there's still a little bit of nervousness about post-COVID collapse of earnings. So it's come back into that $30 again. Hopefully it'll bounce off it, but it's not looking great.
What's the target price on Sonic?
Target price is $35, and it was down from $38.60. They're just taking a little bit more of a cautious stance on that, but they're still overweight on it. So they still say it's a buy. It looks decent, but they are just a little bit worried about, of course, the collapse in earnings. So look, at the end of the day,
Wolf, I know. I just saw they got another stock we do follow, Bellevue Gold, BGL. They got a 140 on it.
Okay, let me sit.
But that is,
that's right.
Macquarie are very bullish on these type of plays, though, so you've got to take that into account. But it was actually having a lovely move. It did a little capital raise, which I think pulled it back a little bit. But you know what? If you like gold, if you like a more risky gold play, it's not a bad one.
Once you hit the production, I think getting closer and closer, right? Once you hit production, you're going to get probably re-rated as long as you can hit your target. So potentially there will be another round of rises for BGL once they get to that stage. So look, it's an interesting story for sure. One of the better gold plays in Australia. Remember, I'm not 100% convinced with the numbers they gave me. Remember, they were looking really high price of gold to do all the numbers. So I'm a little bit skeptical about that. But, you know, you got to give it the benefit of the doubt at the moment because the gold price is actually up there still, right? It hasn't dropped back like I thought it might do. So let's see how it goes. The jury's still out for me, but not bad.
Yeah, I mean, it's a good looking chart. It's on the way up. You know what? Just wait, Wolf. If it's on Einstein's, then we'll trade it. Yeah.
Okay. I agree. I think it's just by the end of the week. Let's see how it goes.
I just want to. Yeah, I just need to see a little bit better price action. But certainly, listen. It's if gold starts moving, it's a very tradable stock.
Let me have a look at gold right now. So gold's dropped about $20 since Monday. So a couple of days off. You know, it hasn't been great, but that's okay. It's not a disaster yet.
No, it's how gold just moves, doesn't it?
Exactly. So
it's
okay. Start of the week is all right.
Yeah, I wouldn't look at gold day out. You go nuts.
I'm already nuts. Doesn't matter.
All right, Wolf. On that note, listen.
Join us for us, the analyst. That's the most important thing tonight for everyone. Please join us because it's going to be me, you, and is he going to be there?
Yeah, we've got the Ocelot too.
Okay.
So we've got the Wolf. Hey, what's wrong with your name? You've gone back to Peter Kopetz. Where's the Wolf?
Oh, no, I didn't do that. That was you.
No, you got to.
No, I don't think I did that.
What?
Mysterious things happen.
You're the only wolf with no hair on your head.
I know. I'm a bald wolf.
You're a bald wolf.
You know, you've seen those dogs that with no hair, and they're going to that ugly competition. I maybe have to do the same for the wolves.
Yeah. What type of dog is that? Maybe we're going to have to change your name from the wolf to
no, I can't remember the breed. Probably Chihuahua or something.
All right. See you. All right. So anyway, got some, another idea today. Bendigo Bank for a dividend play.
Yeah.
Above trend, looking positive. Happy days.
All right.
See you,
Wolf. See you tonight.
Take care. Bye.
Bye.